Okay, so good evening, everybody. So I hope you guys had a nice day. So real quick, for those of us in the last class, I would love you guys to quickly give us a brief explanation of what we did in the last class. So basically, we talked about support and resistance. We talked about fake out. Talked about breakout. Talked about um line charts and the like. So if you're in the last class, please kindly unmute yourself and give us a quick brief explanation about the last class. Please let's do that fast. I'm waiting, please. I'm waiting. Let's not waste our time. Okay.
Um, Good evening.
Yeah, good evening, sir.
So, basically, we sorry, we talked about support and resistance. So, support is basically like a how do I put it now? Is like a if it's on the horizontal side, it's like a price where like when the market comes to that particular point,
All right.
it tends to go back where there are orders to like buy or something.
Yeah.
While resistance is like a price where a like a zones or rather where like price whenever price gets to that place, go when price goes up and gets to that place, it tends to come back down because of like I think sell orders and stuff. And then we talked about fake out. Like most times the market would look like for like support. I mean, sorry, for like resistance. Sometimes the market will look like it will look like the market has broken the resistance, but then the price will still fall down.
Yeah.
And for breakout, it's simply when like the price just like completely breaks out of the resistance, like just moves up, like in some kind of rapid movement.
Yeah. 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 Okay. You are correct to some extent. So I'll make corrections to what you just explained. And actually, I'm impressed. That shows you are following the class. So I'll just put some little corrections to what you just said. So support, as explained in the last class, is like A or V, which is very, very sharp. You understand? So let me I think I still have the chart. Okay, very good. I still have the chart. So this is it. I hope you guys can see my screen, please. If you can see my
Yes.
all right, all right. So I said support is like this. So this is support, this is support. So it is forming A or V, you understand? Which is very sharp at the edge. Now, you said something about breakout. So basically, let me give you the simple logic to understand breakout. Once a support gets broken, you understand, it becomes resistance automatically. Please put that down. If you are to jot it down, I think I said it in the last class, but if you didn't write it in your book now. When a support gets broken, it becomes resistance automatically. And I gave you guys an example here. Understand? I gave you guys an example here that when the price actually got to this point, I explained that it has tested this point. This is the support right here, the first support. Tested this point, it went up, came back to test it. Then it went up again. This is the second support. It tested it and sold. So from this point here, we expect the price to buy to the next support zone, which price actually did. Can you see? It tested this second support, and it came down, tested it again. And I said something in the last class that whenever price hits support, like recurrently, it gets weaker. The more price hits a support zone, it gets weaker. It does not get stronger. Understand? So it broke out. So this is it. Once this point, this support gets broken, if price will test it again, then it will become resistance. You understand? And I already labeled it here. And I explained what I mean by candlestick and weak, just to give you guys example of weak rejections. And I explained some analogies. So if you were not in the last class, don't worry, I'll post the video in this week. You understand? So just give me a little time. That's why I want you guys to just join the live class rather than waiting for the video, because I might not have time to post it as soon as possible, but I'll definitely do that. You understand? So price broke it, then tested it. Let's go to the 30 minutes time frame to see what I'm talking about. So now price came back to test this support zone, and I explained something yesterday that support or resistance, they are not a point, they are zone. That's why I see this red, this aqua rectangle, very very large. Like, it is a zone, it's an area where price tends to reverse. You understand? It is not just a point, it is not just a price line. You understand? So price tested it, then sold. That's the main reason why we saw this sell here. And this gave, if someone had entered this trade, the person would have made about 42 pips. You understand? So that's a sweet trade. You understand? So trading just supports and resistance. So basically, when price breaks a support, well, which we call breakout, once price retests that point again, then that is when we call it resistance. So Mr. Samuel, please take note of that. I think that is just the correction you need. You understand? Mr. Samuel, are you there?
Yes, yes, I've heard. Thank you.
All right. So now, today, let's dive into today's class. So basically today I'll be showing you guys, I'll be teaching you how to draw your trend line. Now, yesterday I said something about support and resistance. I explained about support and resistance, and I said that support and resistance is not just horizontal line. The fact that you are seeing this stuff as horizontal doesn't mean this is the only form of support and resistance. Support can be in form of your trend line, you understand, following your trend, or can be just basically this straight line you're seeing, which I used as an analogy yesterday. So when price is going up, coming down, going up, coming down, I told you guys it is consolidation. So at the top is the support, at the bottom is also the support. You understand? It bounces off the support, comes down, bounce off the support, goes up, then it forms flag pattern eventually. Do you understand, guys? So very very simple. Now, I said I'll be explaining about trend line. So right now, what you can see right here is trend line. So put this in your notes. For your trend line to be valid, to draw a valid trend line, it must hit at least 2 points. Like, at least 2 points is not too strong. You understand? But let's just put it that way, because basically, from my own strategy, my strategy of trading, I use 2 points as my trend line uh strategy, using my trend line. So I wait for the third touch. Basically, that's what I used to trade most of the time, because it works like magic based on my own strategy. And don't forget, real quick, for those of us that did the task I gave initially when the mentorship was about to start, I told you guys I'm going to add you to advanced class. I've not forgotten. After this free mentorship would actually be ending next week. So next week, Friday, Saturday, then Sunday, I'll have a question and answer guy section with you. Understand? I will answer your whole question. Then that will be our last class for the free mentorship. Now, for those that did the task I gave you guys, I will add them to the advanced class. So that's where I'll continue with the advanced. That's where I'll show basically my strategy, how my strategy works, how I enter trade, how I do this, how I do that. That is where I'm going to share it. So all this I'm showing is just the free content. Understand? And also, if you want to join the advanced mentorship, probably you didn't do the what is it called? The task I gave you guys. You want to pay for my advanced class. I'll drop the info probably later in the WhatsApp group. That's when the mentorship is about to start. So let's continue with the class. So as I was saying, the trend line has to touch at least 2 points. You understand? Now I'll explain what I mean by that. If we change it to the H4 time frame, now before I forget, I will always advise you guys to use higher time frame to draw your trend line. Not that you can use the lower time frame, but make sure you draw your higher time frame trend line, because market tends to follow the higher time frame, like the overall trend on the H4 time frame, the daily time frame, weekly, monthly, although weekly and monthly they are going too far already, but the daily and the H4 time frame and the H1 time frame, take them very, very serious. You understand? And don't forget, I've said this at the very, very beginning of this mentorship. I think the first class, I told you the trend is your friend. Always follow the trend. And we will explain that in this class today. So now, let me uh, let me give you guys an example of what I'm talking about. To draw your trend line, for those of us using for those of us using MetaTrader 5, MetaTrader 4 on our mobile phone, go to your open your chart right now if you can. If you can't, just follow me on this what is it called? On this screen. Understand? If you can't, just follow me on this screen. So I'm trying to open a fresh chart to show you guys what I mean. So to draw your trend line, you'll be using a tool which I'll be explaining pretty soon. So just give me about few minutes. Let me edit uh this chart. I'll be done soon. All right. Okay. So now I said to draw our trend line, it has to touch at least 2 points. Now let me give you guys an example here. So let's say you want to take your trend line from here. You draw it from here. Now this is the first touch, like right here. This is your first touch. This is your second touch on the H4 time frame. Follow my cursor on the H4 time frame. This is the first touch. This is the second touch. Now let's just imagine that this part is not there. So basically, if I was using trading view, I would have used the replay section, but unfortunately we are using MetaTrader. So let's just follow the explanation. So now, using the same analogy I've explained, this is the first touch here, this is the second touch here. So we are actually expecting the third touch. Now, calm down. Before you follow the third touch, there are some criteria you need to follow. There are some things you need to see. Number one, the trade, or let me say the market must be a market with movement, like with direction. We don't want a consolidation market. We don't want a ranging market. We want a market that is moving either upwards or downwards. That is either a bearish market or a bullish market. You understand? I've explained what I mean by a bearish market and a bullish market. Okay. Uh Please help post this recorded video fast. My network is bad, your voice is breaking. Okay, no problem. I will try to work on that. So before I continue, I need like just one person to explain what I mean by bullish market or bearish market. I've explained it in our previous video, in our previous classes. So I need just one person.
Okay, guy. The bullish market. I want to explain what's the meaning of bullish market.
All right, Mr. Miracle.
So, bullish market is actually when the market is making higher highs and higher low. When market is creating higher highs and higher low.
All right.
And bearish market is when market is creating higher low and lower low till down.
Sorry, can you repeat that?
I actually say that bullish market is when market is creating higher highs
All
and
right.
higher low
All right.
at an uptrending market. When
Yeah.
market is going an uptrend.
Yeah.
So why bearish market is when market is creating higher low and lower lows at a downtrend
Higher lows.
and lower low.
No. For markets to be bearish, it has to be creating lower lows. The lows, the first low must be lower than the second low must be lower than the first low. So that makes it lower low,
Yes,
then lower highs. You understand? So make that correction.
lower high.
Yeah.
Okay.
So I'm very, very impressed. That's very, very good. I'm impressed. So let's just continue with the class. So I hope those that couldn't join the class then understand what I mean by bullish and bearish market. So now, as I was saying, this is the H4 time frame. If I switch it to the 1 hour time frame, all right, okay, very good. So now I said the market must be moving up, like going up, going up, going up. So this is the first touch here. Price made, let's say, a high here. Okay, let's say price touched it, went up, made a high, then came back, touched it. Now this is where the stuff gets tricky, like very, very tricky. If you actually want to draw our trend line from there to all the way, like all the way to this place, let's say this point. Now this is it. As for me, based on my strategy, I'll take the trade from here because I'm seeing a very, very nice setup from here. A very, very nice setup. And I'll target the recent high. Understand? So that's about 180 pips. If I'm taking this trade, it is a very, very sweet setup. But for your side, for your level right now, since you don't know the strategy I use, don't worry, I'll just try to break it down using the simple terminologies. So now, this is the first touch, this is the second touch. You can see price actually touched it here, then came back to touch it. So this will be the point where I will take the trade. But let's say, okay, for instance, price didn't touch it again. Price came back here to touch it, which is our third touch. So normally we'll be expecting price to like buy from here. Then we'll be targeting at least to this point right here, making it about 210 pips. We'll be targeting. But unfortunately, price did not respect it. So let me draw the trend line all the way here. You understand? Very, very, very good. Wow. I love this. I love this. I love this. Now, price did not follow what we told, or let me say what we're expecting. You understand? Price touched this place and it gave us a fresh higher high. You understand? It is higher than this point right here. It made higher high. So we're expecting price to touch this point, then we long the market all the way here. And I told you guys in the last class that your trend line also acts as support. Understand? So this is the first support, second support. Now, calm down. Let me tell you something very important right here. Your support using trend line does not mean like does not mean it's going to break it. You understand? Unlike the consolidating market, you understand? I told you the more market tests a support zone, the more it gets weaker. That does not mean once it tests it the first time, test it the second time, it will fail. No, you can't predict the market. Trade based on your analysis. You understand? Just always know that okay, price hit it the first time, it broke it. Hit it the first time, it respected it rather. Hit it the second time, it respected it. Hit it the third time, it respected it. It can actually hit it the fourth time, the fifth time, and still respect it. But just know at the back of your mind that okay, this price is hitting this zone. It is getting weaker. Sooner or later, it will break it, and there will be a breakout eventually. Do you understand? So it is very, very, very simple. Now, as I was saying, since we said our trend line also acts as support, wow, I love this setup. I really, really do. Let me move it back to where we were. Okay. So now price has tested this point right here, which is the first touch. We are taking it as the first touch. Tested it again, second touch. Now we're expecting it to touch it the third time, then we long. Normally for me, I love to take the touch. You understand? So now we're expecting price to hit it the third time and go up. But unfortunately, price sold like this is a breakout. Understand? This is a breakout. Let me label that. This is a breakout. So right here, this is a breakout. Price broke this support zone. Don't forget, I'm trying to hammer this. We are using our trend line as the support now. We are not talking based on the analogy I gave you in the last class. This is a fresh analogy, you understand? And that is just the two ways you can see support and resistance. You understand? Now, I told you whenever price breaks a support and comes back to test that support, we are expecting a sell. That means support becomes resistance. You understand? Now, and I told you in this class, our trend line is acting as the support. Price has tested it right here. Price has tested it right here and broke it. Now, we are expecting price to touch this trend line again. Now, this is where you guys can make mistake, and I don't want you guys to make mistake. This is where the price actually hits the, let me change this. This is where the price broke out. You might be thinking this is where we are going to sell. No, 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 no. That is not where we are selling. Price has to touch this trend line we've drawn. Don't worry, just leave your trend line the way it is. Wait for price, even if it is giving you weak rejections. I explained what I mean by weak rejections in the last class. Even if it is giving us weak rejections, we don't need it. We are waiting. Just wait. Okay. It's very, very simple. Let me give you this simple trick to it. We as a trader, we are just like farmer. Whenever a farmer, or let me say an hunter, whenever the hunter goes to the farm, or let me say goes to the bush to catch what is it called, to catch either all these animals, all these bush meats, they set trap for them. The hunter sets trap and goes to his bed or to his family to go and enjoy, waiting patiently for the animal or the bush meat to enter into the trap, and soft, without stress and without problem, the trap catches the bush meat, and the farmer meets the bush meat in his trap. Now, the analogy I've just given now, bring it back to the forex trading. You understand? We set trap for the market. Basically, we wait for the market to come to our zone. We already analyze the market. Okay, fine, price has broken this zone that we're expecting it to buy, but unfortunately it sold. Okay, fine, price, you've done yours, very, very good, is amazing. You understand? What we do is that we wait for price to actually come back and test our support. And I told you the support is this trend line. Now, you can see price actually came back after selling. It came all the way back to this point of this support right here. You understand? When it tested this support again, and I told you whenever price breaks a support zone, it becomes resistance. So right here we are seeing resistance using the trend line support. So let me label that. So basically, this is our resistance. You understand? Now, this is it. This is our resistance right here. Price tested it and actually sold. So this is about 62 pips, which is very, very good. Very good. If you catch 62 pips with $100,000 account, man, you'll be rich. You understand? Now, I know normally I should be expecting a question from you that, okay, you said whenever price hits that support zone or something, something, like once price has broken it and it gives us resistance, we should be taking our profits at the recent low, right? Okay, fine. What now happened here? Now, this is the trick to it. Whenever you're in a trade like this, okay, actually, this is an advanced class stuff, like advanced class package, but I'll just tell you guys here, because let me just tell you guys. Whenever you're in a trade like this, once price drops in your favor to some good amount of pips, you break even. Now, let's say for instance, as a trader, you've broken even right here, and you can see that price actually reversed all the way up here and even tested it second time before selling. If you've broken even here, it will hit your stop loss in profit. You understand? So you won't be in loss. You have any thing to like to be bothered about. You understand? Now, for those of us that have saved my contacts, you will see that I actually dropped GBPAUD analysis. This same analysis I'm using to explain to you, I took this trade, like this exact trade, and I told you guys I'll be taking the profits around this zone right here. This zone right here. Understand? Now price has dropped about, from where I entered, it has dropped about, this is about 372 pips before it's reversed. And I'm very, very sure price will still sell. I'm very, very sure, except there's manipulation from the markets. But I'm quite sure the market will still sell. So this is actually a trade I'm monitoring. I'm using as an example for you guys. Now, as I was saying, if price actually hits your break even, it will be in profit. Now, once it hits it, you don't need to sell again. You don't need to like sell again. Just patiently wait for the market to test this what is it called, this trend line again, which is acting as our resistance. So it is still in the resistance until the price breaks this resistance and goes up. You understand? The trade is still valid, the setup is still valid. Now, it tested it here, went up again to test this same trend line before it starts selling. So normally, for you as a trader, you take your first profit here, and as you can see, price actually tested it, sold all the way there and came to this recent low, and that's about 222 pips. Even if you are trading a $10 account and you catch 222 pips, bro, that's lit, that's fire, that's magic. You understand? No worry, you start understanding what I mean by pips when you start trading. So when you catch like just 10 pips, in fact, you'll be grateful to God. All right. So as I was saying, now let me quickly give you guys, let me say this thing. Actually, I'm actually entering into the advanced class little by little, but I'm trying to stop myself. There's something we call confirmation. For every trade you take, you must always see confirmation before you sell. So basically, this is how the trend line support and resistance works. You understand? I've given you guys the analogy of how it basically works. So right now, I will take questions. So basically, that's what I want to teach you guys this night. So if you have any question at all, please let me know right now. Let me answer your questions. Look at the charts, ask your question. Let me answer your question before we call it a day.
Okay. Good evening. Um. Like after like after you drew like this breakout, talking about like the price leaving the trend line, the support
All right.
to become like a resistance. You were saying something about break even. No, is it break something about like if you're after like when the price gets to the breakout position, you're supposed to sell, or I think you said like
Yeah, I understand what
drop
you're.
your stop loss.
Yeah, 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 yeah. Okay.
So
Is that your question, sir?
like, sir,
Is that your question? I already understand what you're talking about.
yeah,
I also have a
yeah, that's
question.
like my question. And like the second thing was like how do you like know where to put your stop loss in this kind of situation?
Okay. Now, you guys are trying to push me to the advanced course, but I'll just give you guys a simple the simple method of setting stop loss. We'll talk about how to set stop loss, how to break even more in the advanced class. But for this free class, I'll just give you guys the simple analogy. Understand? Now, quickly, let me explain what I mean by break even. I said I said we're going to sell when price tests this zone. You know, this is the breakout right here on the trend line. You understand? This is a moving market, it's not ranging. So we expect a retest on the trend line before we sell. You understand? So now, once price tests this trend line and we sell from there, let's say price has dropped about, let's say about maybe 40 pips, 20 pips, you can set your break even. Now, how do you set your break even? Let's say for instance, you are selling, like you place the sell order from this point right here. Like this is where you set your sell limit, or let me say that's where you entered for sell. Now, price entered into that zone, fine. Then price started dropping in your favor, started dropping. Initially, when you entered for sell, this was where your stop loss was. No worry, I'll label it so that you guys will understand. So let's say stop loss. So let's say that's your stop loss. Then this second line was where you sold. Let's say sell one lot size. Okay, so this is where you sold. This is where you put your stop loss. Now market traded into it and started selling. Now let's say market has dropped let's say 35 pips in your favor because you sold. Market has dropped 35 pips up to this point. Now, this stop loss you are looking at here, to break even, you move it from this top here to this point. Now, moving it, just make sure it is below your entry point. You can now move it all the way here, you can move it all the way here, you can move it even 5 pips from the current price of the market. If it hits it, you are still in profit. Just that it might actually still sell, that you will lose some good pips you should have actually acquired. But let's say you moved it to this point. Now you won't call it stop loss again, you call it break even. You understand? So that's the simple meaning of break even. So you call it break even. You understand? So whenever you maybe you're in a signal group and they tell you to break even, that is the simply meaning. Bringing your stop loss from the initial point below your entry point for sell analogy. Then for buy analogy, taking it from the point it is above your entry point. That's for buy something. You understand? So basically that's what I mean by break even. Now you said something. The second question was about stop loss. To set your stop loss, normally, ideally, eh, using your risk management, there's no amount of pips you can set as stop loss depending on what you are seeing in the market. But I love sniper entries, you understand? So let me say the average, like the maximum stop loss you should be setting for your trades is 30 pips, like maximum. And don't forget, for any trade you are taking, the least risk to reward ratio you should be setting is 1 to 2. So basically, I've explained what I mean by risk to reward. Check my previous videos, but let me quickly break it down. Risk to reward is the amount of pips you are risking to get so amount of pips. Let's say for instance, okay, I set my stop loss at 30 pips. I am determined that okay, at least in this trade, for me to risk 30 pips, I must get at least 60 pips. That's 1 to 2 risk to reward. Refer to my previous videos to get knowledge about that. You understand? So that is how to set your stop loss basically. Set it 30 pips from your entry points, or let me say 50 pips. It just basically depends on your setup. Some traders set 50 pips stop loss, in fact 80 pips. It just depends on your risk to reward. If you are setting 80 pips, you should know that okay, at least you are looking to catch 160 pips, or let me say 500 pips, depending on your risk to reward. Just make sure it is always 1 to 2. Now, the fact that I said it should always be 1 to 2 does not mean they are not exceptional cases. Let's say, for instance, after reanalyzing the market, you see that okay, the market won't go in my favor to my risk to reward. You understand? Now you can take your profits and leave the market. It is better to take profits, your little profits, than price to eat your stop loss and you should lose money. You understand? There are some cases like that that you won't have to wait for your 1 to 2 risk to reward before you take your profits. You understand? Those are the cases when you can actually take your little profits and leave the market. You understand? Very, very simple. So I think I've answered your question, Mr. Samuel.
Yes, you've answered it. Thank you.
All right, Mr. Miracle, please let's have you so I can round off this class. Mr. Miracle, are you there? If we any other question, please. Any other question? Any other question? Any other question? Any other question? All right. I'll probably wait for about 30 seconds. If there are no more questions, then we'll just call it a day. Don't forget, guys, please. The link to my recommended broker is in the description box. And I've posted it in the group. Rockwest. Join Rockwest, fund the account, trade, make money. And if you want to join my advanced class, for those that didn't perform for those that did not perform the task, to join my advanced class, the 6 month package is actually cheap. I think it's about maybe $100. I think so. Then the lifetime package, let's say you want to like stick with me forever, that's about $150. So cheap, actually. So you can send me a DM on WhatsApp. And for those of us that's performed the task, you'll be added to the advanced group, definitely. And I'll teach you my strategy and everything. You'll be very, very good. Like I have that motive to make everyone in my advanced class very, 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 very good. Very, very good. You will see the charts, you'll be able to analyze it even before touching the screen. Just looking at it, you'll be able to analyze it. All right. So I think there are no more questions. Okay. If there are no more questions, then we'll probably call it a day. So this class is actually being recorded. If you have friends that are interested in learning Forex, you can just refer them to my YouTube channel. The class so far has been posted, excluding yesterday's class. So yesterday's class and today's class and tomorrow's class will be posted this week on YouTube. So I appreciate you guys. Thank you for coming online. Thank you for adding value to your life. And don't forget to subscribe because I know some people will be watching it on YouTube. Subscribe to my channel, like the video. If you have any question, you can drop it in the comment section. So I'll see you guys in the next class, which is tomorrow. The link will be posted, and I'll see you guys. So peace.